Hello, hello, good afternoon. Welcome to Boom, Doom, and Zoom. I'm Paul Rickard. It's Thursday, the 14th of October, just after midday Eastern Standard Summertime, and my pleasure to welcome, of course, Peter Switzer to the program. Peter, how are you?
I'm very good. Thanks for welcoming me, Paul.
I'm going to start by talking to you about the employment data, which has come in pretty much as expected, Peter. I think we lost 138,000 jobs in the month, and the unemployment rate went up by 0.1% to 4.6, and also the hours worked went up by a little bit, which was positive. So probably not. That's pretty much in accordance with what the market was looking for, I think, Peter.
Yeah, I think CompSec even had 200,000, Paul. So 138's not bad. Look, I've got to say, I'm actually quite staggered how well this economy of ours has actually coped with all of this. Part of it's been helped by the fact that crisis payments have actually kept people probably still employed, we're still working with an employer. But really, Paul, considering the Treasurer told us yesterday that the September quarter has come in worse than that the Treasurer expected, and it would probably cost the economy about $5 billion more than expected. Still not bad. I would have thought the numbers would have, unemployment in particular, would have crept into the 5% for sure, possibly even 6. But one thing I will throw in, Paul, I interviewed the chief economist of Westpac, Bill Evans, only yesterday for tonight's TV show, Switzer Investing. And Bill actually quite staggered me. He was saying that Westpac thinks next year is going to be 7% growth. That's a big number, isn't it?
That's a huge number. Well, I don't know if you saw those pictures, which I hadn't seen. I mean, we've been in the city a bit in Sydney coming out of lockdown. It's been pretty quiet, but I saw pictures of people queuing to get into Kmart at Campbelltown, which really surprised me. So the queue was a mile long, but anyhow.
I think that impact of not being able to travel overseas has actually kept a lot of demand actually kicking over, and there's been a lot of spending, which ultimately employs people in warehouses and trucking businesses and stuff like that. It's quite staggering, quite really.
Yeah, it could be that places like Queensland become the challenge spots because, if they're locked down, well, not locked down, but they're restriction on visitors, and the Queensland summer coming up, a lot of people will be cancelling holidays again, so they need the interstate tourists, but could be some challenges up there. Okay, let's move on. I thought we'd just start with A2 milk. It's up again today. It's really come on the back of Bubs yesterday. I don't think the chart we've got it there is quite as up to date as the performance data. Maybe we could just go back to a 3 months chart, just to have a look at if you can do that for me, Luke.
Sounds like your dog's a bit cheesed off there, Paul.
Always the way. When you do one of these things, the dog starts to bark.
Yeah, Zoom.
That's the problem of
coronavirus plus Zoom equals barking dogs.
So, again, Bubs is hell of a lot smaller than A2 milk. It was largely in the back that Chinese sales weren't as bad, and the Daigyu market maybe not as bad as people have feared. Do you see a bottom here, or is this sort of just one of these inevitable sort of rebounds you get when something's been sold pretty hard?
Well, yeah, I think it's one of those rebounds, Paul. I also think the worst case scenario has been imposed on companies like A2 Milk. I don't think Bubs is really the complete rival to A2 Milk. There's differences in Bubs, and Bubs is a lot smaller. And so an improvement for Bubs may not necessarily mean that A2 Milk has instantly turned a corner, but certainly at this point in time, the market believes so. And I think we're getting a sneak preview of what would happen to a company like A2 Milk when tourists start coming back, when we start flying. So I've always believed A2 is going to, and just like I do with Appen, I think it's going to be a 2022 story. But of course, the market always tries to anticipate it and jump in ahead. And that's what we're seeing. Remember, A2 Milk's still got this class action as well, but the market certainly believes that they've probably been too hard on this company. And you and I have always said, whatever its current problems, this is a very good company. Have we lost you?
Unmute. I had too many challenges at home with, hang on, that should be better. So thanks for that, Peter. Let's go to your questions. We're going to start with Craig. He's on the line. So if Luke, if you can unmute Craig.
Yeah, g'day guys. I just wanted to get your thoughts on Star Entertainment. They got hammered, that same sort of way as what happened with Crown. My question is, where does that leave Crown? Because Star was looking to do a takeover bid, and I just wanted to get your thoughts if that was still in their plans, or where you think Crown will be heading into that sort of situation. Thanks.
Yes, Star to Luke is SGR, I think you'll find. Look, that's a really good question. I might go first. I think I decided think Crown is sort of is an interesting stock, because I think you buy that for the basis that something's going to happen to the company, right? Yeah, it's a punt, but at the end of the day, they've got valuable property, they've got a valuable license. They'll have to change their team. Maybe it'll be bought by someone. And you're right, Star was one of the people that were potentially going to buy Crown, or at least the license. So I don't know whether the market's overreacting a little bit to what's been reported about Star. My guess is they probably have. I'm not up to speed exactly with what the allegations are, but all these sort of we've seen it go through the banks, we've seen it go through the casinos. Anywhere where you can launder money, we know that a lot of these companies need to do work on their AML. And I think maybe the market overreacted to the Star stuff. What's your view on that, Peter?
Yeah, I think so, Paul. I think it's an overreaction. But look, remember this. The big drivers in a stock market aren't long-term investors. They're short-term investors. They're traders, they're fund managers who have to report on a quarterly or 6 monthly basis, and they can't muck around. So if they think there's a news story like Star's going to cop the same kind of grilling that Crown's got, what are they going to do? They're going to sell. It probably is the opportunity for the long-term investor who says, right, they'll go through it, they'll get through it, and the stock price will rebound, particularly when tourists come back, a bit like A2 Milk. And so it's a buying opportunity for the person who's a patient investor. And I think that's probably going to be the story going forward. But there will be some hairy moments like we've seen with Crown.
Simple and I think the withdrawal of the bid was tactical. I don't think Starch lost their interest in Crown. I just think they realised they didn't need to be out there, and they just needed to wait and be a bit more patient.
And Paul, they probably saw this coming too, the potential grilling of their operation as well.
Yeah. So just have a look at Crown while we're there. I mean, it's just CWN is the code for that. Yeah, so it's not really doing a lot. I mean, until you get the outcome of the Victorian Royal Commission, then you've got the WA Royal Commission. Very hard to know what's going to happen there until but the suspicions that I have, Peter, and I think you believe, is that something will emerge, will either allow new management team, new board, a whole lot of conditions on Crown to continue, or they'll transfer the asset to somebody else. And, and on that basis, shareholders probably won't suffer too much pain. That's my sense.
It's going to be a duration issue, but eventually a company like this, remember, it's still probably the major tourism attraction in Sydney for the Chinese and Asian tourists who love gambling and love staying in resorts. It's going to, as a business, it's going to make a comeback. Eventually the share price will show it, but you'll have to wait.
Let's go another question about a company with AML, anti-money laundering problems. That's EML. This is a question from Peter. It says, good afternoon, Peter and Paul. Following the CBI concerns in Ireland, the share price of EML has almost halved since the initial announcement, with the impact looking to add up to less than 20% of revenue for the business for EML. Do you think the sell-off is overdone? Well, I've never, when that announcement first came out, I was always a bit dubious in the sense that I just thought this is something that could go on for a long time.
Yeah.
And, when you say it's halved, well, it hasn't halved since the announcement. It's sort of about where it was straight after the announcement. Then it rallied up and then it's just drifted down again, if you look at that chart. I don't think we're any closer to understanding exactly what's going on there. And that's a challenge when you get caught into these regulatory things, is that sometimes they just drag on for an awful long time. And the market needs an answer one way or the other. So You've been a fan of EML, Peter. I mean, you think it's a
Well,
good
yeah,
recovery as
and,
well?
yeah, and I was blindsided by the Bank of Ireland thing, the central bank there. And the reason why the share price started to improve is that there was a message coming out of the company. They thought the whole thing was being managed, and if they were going to be fined, it'd be a manageable kind of fine. And then only recently, the Bank of Ireland or the Central Bank of Ireland has basically said, "Oh no, we've got more questions we want to ask," and so fears have been regenerated. But if you go and look at what the analysts, and there's 3 analysts that now cover EML. Interesting, there was AM1 once upon a time, 3. UBS has a 55% upside, Orbinet 30%, and Macquarie 47%. Now, I would suspect all these analysts would have looked at and weighed it up, and they're doing their best guess. So, from my point of view, I'm holding EML. I've got a big allocation. I bought it because I put forward the ZEET idea, and I was going to suggest something, not have some money, skin in the game. It seems to me that these guys think EML future will eventually be more positive than negative.
Okay. All right. So a question here about lithium. This is from David. He says, have I missed the lithium run? I'm not sure I can show you a price of the oxide that they use. What lithium stocks do you see as having good upside? Well, they've certainly run pretty hard. Let's have a look at, say, Pilbara Minerals, which is PLS, I think. Yeah, I mean, have a look at that chart, Peter. That's probably one of the major producers. Yeah. Have you missed the upside? Well, you know, we all know we're in an EV revolution. There's a shortage of some of these minerals. Prices have gone through the roof. Look, maybe. I don't know. What do you think?
Well, the analysts think that Pilbara has 9% upside, Paul, or Cobra 10% upside. I don't think you've missed the boat, but what happens is you might have to wait for the next big leg up, because there've been big legs up. But as you can see, there's like a period of rising, then it goes sideways, rising, then sideways. We're in the sideways section. So if you're a patient investor, probably this is a good opportunity to buy, but you might have to wait 2 or 3 years to get that next big leg up. That's just the way it is.
Okay. This is from Super 59. Is Whitehaven Coal still a buy at current prices? WAC. One of the problems with a lot of the coal companies now, a lot of the analysts don't cover them anymore because a lot of the investors won't touch them. But Whitehaven Coal's gone through the roof with the price, the coal price going through the roof. I don't know, Peter. What do the analysts say?
The analysts say 6.6% up. So I'll look at the range for as well, just see if there's any outliers. But look, I think the gutsy time was around May, even before November the year before. But I don't think there's going to be much more upside by the record high prices now. The biggest tip out there is Orbinet. They still think there's 23% upside. 2 out of the 6 have a negative view, and those negative views are 16% or 12% down. But it's still probably in buy territory, but I just wouldn't expect big gains from here.
Yeah, you got to be a bit careful with that stock. I mean, it was friendless as are all the coal stocks. Suddenly, the coal price has gone through the roof because you've had a shortages in China. You've had issues in the UK, in Europe. You've got a cold winter in place, or it looks like a cold winter. You've got and it's gas is short supply because of all sorts of issues, and coal's gone crazy. So what you got to know, what you know is at some stage that price will turn around. It always does with a commodity price. Exactly. And I'll be friendless again. And it's, to be honest, people aren't going to go back, and the major funds are never going to touch these companies again. So I'd be a little bit careful after I missed this run up. I didn't see it coming. I'd be a little bit careful getting on that.
Well, Paul, you wouldn't have gone because you're an ESG kind of guy. You're out there to save the planet.
I think that's an exaggeration, Pete. But, okay.
Maybe you're not.
Let's get a question from David. I'm just trying to look up something as I look at this. This is a question about ResMed. Do you have any? It says RMD. if you have any explanation for ResMed dropping 15% in the last 3 weeks. I'm just trying to look at whether it actually reported last night or not as we talk. Now, ResMed, if you look at that, it went from about $25, $27 all the way up to 40 in super quick time in between June and mid-September. I'm not sure that was ever justified. It wasn't. It had one bit of news in that period about its production, and then it's come back. I just think that the stock got too expensive. Few people making profits. It's coincided with higher bond rates, which has sort of been bad for some of the so-called growth stocks like ResMed in the US, and that's sort of where it is.
Paul, can you ask Luke to give us the 5-year chart? And you can see there, guys, ResMed is a steady climber, and then people take profit, and it's often a good time to get in for the next leg up. And maybe there's a little bit more downside, but ResMed to me has always been one of those stocks that you buy once it's been beaten up. And this company tends to surprise the market by doing something really good. And I wouldn't mind betting inside a year we're talking about a $40 stock again.
I think you'll find out from memory, ResMed releases its quarterly numbers tonight. I think in the US now the Aussie listing on this is actually secondary. It follows what's going on in the US. And you can follow that price there on things like CNBC. So if you're investing in ResMed, you really should track what's happening in the States. We just follow the leader there. But I'm pretty sure its quarterly numbers are due out tonight. So I'd just probably not be looking to invest today, but that would be my guidance. Okay. Your thoughts, this is from Peter, your thoughts on Accent One, which is AX1. I think we covered that on the report the other week, and IZZ, which has fallen with the China drop. So let's have a look at, let's go to IZZ, which is one of the iShares things, I think, from memory. And I think
it's a large cap China.
Yeah. Yeah. What do you, I mean, what do you say about that, Peter? I mean,
if you're a speculator, it's probably a buying opportunity. I wrote in the Switzer report on Monday, I didn't think I'd ever say this, that, maybe it's worthwhile gambling that the Chinese government will ease up and stop, picking on their own best companies like Alibaba and Tencent. We saw Charlie Munger, Warren Buffett's buddy and mentor, I think it's got 45 mil, wasn't it, put into Alibaba. So I think there's probably a bet that there could be a change of attitude. I know when Bill Evans from Westpac, I asked him about what he thought the stock market will do, and he pointed to China being a headwind, and he has the feeling that China is going to sort of hose down a lot of its negative crackdown type attitude towards both its big companies and its trading partners over the course of this year, rolling into 2022, which he thinks will be a positive for stocks. And so something like this may well be a worthwhile punt, but I take no responsibility. It could be a good opportunity. Remember, as Buffett would say, be greedy when others are fearful. Well, plenty of people are fearful about China at the moment.
Okay, let's go to a question from Lloyd. We're going to try to unmute you, Lloyd. So if you can do that for me. Yep, that should be okay. Just
unmute. Yep. Yeah. And this question really follows on the discussion you're having about China and your article on Monday, Peter, about Asia. And as the ETF that I noticed, Taiwan Semiconductors is a significant holder in the Asia ETF.
Yeah, the biggest, I think.
Yeah, and so I was sort of following on to say, well, maybe there's I'm interested in your comments on that particular issue, because that ETF is also a managed ETF, isn't it? So it's possible that Beta Shares would rearrange the balance between Taiwan Semiconductors and some of the other stocks there. Interested in your comment on that proposition.
I must admit, I'm not aware. You know, we would be guessing what beta shares might do in terms of the rebalancing. I think they're happy with Taiwan Semiconductor. It's having its troubles now, but I don't think its troubles will last forever. They'll eventually get on top of their microchip issue, and that will probably be a good thing for the overall share price of that company as well as the ETF. Paul, what do you think?
Yeah, I think, look, Lloyd, I'd have to look it up. I can't recall how they do it, but there is a, it is, when you say managed, it's back to a rule base. So a lot of those funds do rebalance on a quarter basis, and there's a rule base. They are following a de facto index of some construction. So although it's a managed index, so I'd have to look up the rule base. But yeah, I think it's as you say, that's probably why I prefer that rather than something like IZZ. I just don't quite 100% trust the Chinese, Peter, for you probably imagine.
Yeah, because you're a historian, that's why.
Yeah, so I'd probably something a little more not diversified, but diversified away from China. I mean, I think there's a couple of other businesses from South Korea in there as well too. So
yeah, that's right. The ETF Asia is not all China. That's the important part. Yeah.
Okay. Question here from Lisa. Do you have information on what is happening with Western areas? Which I think is WAS from memory, isn't it?
Yeah.
I didn't know how much was going on in Western areas.
Yeah, well, I think Twiggy had some involvement with Western areas lately, Paul. Like he's had some involvement in terms of trying to block
WSA, sorry.
Yeah, WSA. That's it.
Yeah.
Yeah.
Apart from some of the commodities they produce have sort of been pretty strong, but maybe we can make that one on notice.
Yeah, that could be a good one for Monday's show, because I know I came across something where Twiggy was trying to do some sort of a blocking play involving Western areas. So yeah, that's definitely a Monday night special. We'll look at that.
Okay, so this is from Denise. Hydrogen ETFs and Fortescue. I'm not sure what the question is. I don't think that we yet have any hydrogen ETFs. I mean, very early days. This is still, it's not, I won't say it's experimental technology, but so much hype. It's a long way from production, right? And Fortescue, well, you know, you can see what Twiggy's doing. So, you know, he's going to, the next decade or a couple of decades, he's going to have a truckload of iron ore royalties or product or earnings, and he's investing. He realizes at some stage that's going to run out and be unfashionable, and he's starting to diversify into other commodities.
Paul, why don't we have a look at HZR, which is like an IP green hydrogen business. HZR. Yep. Now, I'm not surprised it's done well this week with all this hydrogen talk around the place. So it's over a year. It's down what, 6.8%. Give us say the last 3 months, Luke, if you could. Yeah, that's more like it. Yeah, that's, you know, all this talk about green hydrogen. A company like that has benefited from it, but yeah, it's a company that's developed technology. And they basically want to be taken over eventually by a bigger organisation that's really getting into hydrogen in a big way. Not surprised to see it's done pretty well.
Okay, question from Anonymous. What are your views on the pros and cons of exercising current options to purchase MFF shares at $2.60? I'm just wondering whether that's MGF, but let's have a look at MFF. Okay, I think we're going to have to look. I guess that's an option yeah, I mean, look, I guess I have to look at what that option range is and when it expires, but it's pretty well in the money, so there's not going to be a lot of premium left in the option, not much more, a lot of time value premium in the option, and so you know, you're going to basically see the option trade at pretty much close to the difference between the strike price at $2.60 and the current share price of $2.88. So it maybe makes sense to actually purchase those options now that it's so far in the money. Anyhow, that's probably the best way I can answer that one. I got a couple of highs. What are your thoughts on Optiscan oil, which I'm not sure I know what that code is. It's OPTISCAN oil. I'm not sure. Okay.
Now, oil is a ticker code, Paul. It's Optiscan imaging.
Optiscan imaging. Sorry, I did.
Oil is a ticker code.
Yep. What do you know about that, Peter?
No, absolutely nothing, but I will look it up.
Yeah. I don't think they have a lot of analyst coverage from looking at it.
I don't think so either. No coverage. It's really small. I guess it's in the right space, isn't it, Paul? Imaging and all that sort of stuff. But okay, let's throw that in for Monday night show. I'm hoping Luke's writing these ones down. We probably haven't told him that's part of the gig. But yeah, let's have a look at that one.
Okay. Thoughts on baby bunting from Shabir, which is a BBN?
I like it personally. We'll see what the analysts think. Analysts think 19.5% upside, Shabir. So that's and look, I think it's a company that has really created a great niche in the Australian retail setting. I've always worried that it could be challenged by the likes of Amazon Prime and other department stores that are now online. I'm sure Kogan's probably in the baby space as well. He seems to go into everything, but I think they really have a stranglehold in this area, a bit like JB Hi-Fi, Paul, when it comes to electronics and stuff like that. And certainly the analysts like it.
Okay. Question here from Robert. IAG had a major win in the federal court on the 11th of October, and that's of course over this the insurance around business interruption risk for COVID. The win relates to wording around the BI insurance. He says pre-COVID the stock was $8. Do you think this will bounce when provisions are written back on? Look, I like IAG. It's not doing a lot at the moment. The market's a bit sort of non-plus diet. I mean, that I think everyone expects that federal court decision will end up being appealed all the way through to the High Court. So the game's not over here yet. This has got a long way to play out, and there are potentially billions of dollars of payouts that are risky. IAG's, I think, provisioned for about as much as it can. And I think they're worried, the market is worried about even if it loses that case, there may be some other things that get impacted as well. So I guess it's probably not going to have a huge catalyst on the upside until all the legal process is exhausted on this stuff. What do you think, Peter?
Yeah. And Paul, look, it's like I said earlier with some of the other stocks, this is probably an okay long-term play, but the market's not going to get hot to trot until they're confident around the legal implications. And probably it will work out better than what most people expect. And the $8 share price might come back over time, but you might need 2 years for it to actually happen. And also, I think rising interest rates, that'll be good for a company like IAG. It plays in the bond market, as all insurers do, but it's going to be a wait and see.
Okay, maybe the last question we'll go to Bruce. Bruce, we'll try to unmute you. Yep, so I think you should be...
Unmute.
Yep, you're right, Bruce.
Okay. Question on MedLab. It's a small company as such, and are developing in the health space with respect to their delivery of medicines through a new technology. I think it's nanotechnology. And they've had, from what I've read around the traps, they've had some success with getting licensing of sorts over in the United States and in Europe. I'm just wondering what your thoughts are longer term for them.
We're just looking at the share price. We'll just see if there's any analyst research. Looking at the share price, it's not doing a lot. I always get a little, I think when I don't know where you describe this in the biotech sector, I guess it probably is, but or more medical devices area.
One analyst covers it, Paul. One analyst is Morgan's. They've got a 29-cent target, which would be 107% upside. But as you know, this is Bruce, it's a risky play. It's got potential, but
Yeah, I mean, I think the way to this is when you invest in companies like this. It's got to be sort of money you can afford to lose, I think. And if you like what they're doing, you know, you're an investor, then you just have to be really patient on it. Maybe you look at this as the price and say this is a chance you buy more. But I'd say it's in the sort of category of money that's not your key portfolio tied up in, but it's money that if it goes wrong, you know, and it comes to naught, then you know it's not going to be the end of the world for you. But I just don't know enough to know what their prospects really are.
My research would start February this year when it was 32 cents to see why it got to those levels and what choked the market off after that. But, you know, it's been 32 cents and it's now 14. There's still plenty of upside if the reason for its first rise can be repeated.
Okay, folks. Look, we're pretty much out of time because we do keep these programs to exactly half an hour for you as much as us, but because we know that you're all quite pretty busy. But we'll be back same time next Thursday for Boom and Doom and Zoom. Peter, thank you for joining us, or me, and the viewers.
Pleasure. And don't forget, the show is on tonight. Go to Switzer Investing on YouTube and you'll see the show tonight.
Okay. Well, everyone have a great afternoon. We'll be back and we'll talk to you again next Thursday. And of course, you can read Switzer Report this afternoon, and of course on Saturday with Peter, and back on Monday next week. We'll talk to you then. Thanks for joining us. Good afternoon. Guys.